Adobe has been the king of the creative world for 20 years. But if you look at the price action lately, the market is starting to treat it like a legacy tech company. I've just made a significant move on Adobe. I didn't buy the stock, and I didn't short it. Instead, I sold put options with a $260 strike price for January 2027. Why? Because I've fully embraced the Adobe Bear Thesis. I think the stock is headed for a rough 2026. But here's the kicker. I've structured this trade so that even if the bears are right and the stock stays flat or drops another 15%, I still walk away with a profit. Let's talk about that bear thesis. There are 3 reasons I'm cautious. The good enough revolution. Tools like Canva and AI-native startups are democratizing high-end design. For a huge chunk of Adobe's user base, good enough is becoming the new standard, and it's $50 cheaper per month. Margin pressure. Adobe is spending billions to stay relevant in AI. Their record revenue in 2025 came at a cost: lower operating margins. They're running a race on an expensive treadmill. Multiple compression. We've seen Adobe's PV slide from 40x down toward 18x. In a world where growth is slowing to single digits, the premium valuation is vanishing. The market is pricing in a worst-case floor around $270 to $280. That's exactly why I chose my strike. So, if I'm a bear, why sell a put? Selling a put is a neutral to bullish move, but at $260, I'm playing a safety-first game. The safety margin. With the stock at $310 today, $260 represents a 16% further drop from here. By selling this put, I'm saying, I bet the bear thesis won't be so bad that Adobe loses 50% of its value from its 2024 highs. The worst-case win. If Adobe hits $260 by 2027, I am forced to buy the stock. But I'd be buying a world-class software giant at a valuation it hasn't seen in years, essentially a fire sale price. The income. I collected a fat premium upfront to take this risk. If Adobe just wobbles around $300 for the next year, that premium is mine to keep. Investing in 2026 is about probability, not certainty. I'm acknowledging the bear thesis is real. Adobe's dominance is being challenged like never before. But by selling the $260 puts, I'm not praying for a moonshot. I'm just betting that Adobe isn't going to zero. It's a way to get paid for my patience while the market figures out if Adobe is an AI winner or an AI victim. What do you think? Is $260 a safe floor, or is the creative moat gone for good? Let me know in the comments.